Analysis retrieved successfully. Onboarding Striker X now. 3, 2, 1, start sequence.
Welcome to the Advanced Technical Analysis chapter. In this chapter, we want to cover the powerful bearish candlestick combinations. And in the previous chapter, we have covered individual candlesticks, and that we will actually come to a common base of bearish pin bar and also bearish ice cream bar. So those are the most common individual candles. So in the bearish candlesticks combinations, you might see they are actually around 28 combinations. All right, of course, there might be more, but of course, we also need to know which are the ones which are more common and which are the ones that are really more powerful. And we don't really have to remember all of this. And what we need to remember is from 1 to 11, 22, and 25. So all of these are given some names to each of these combinations, like shooting star, bearish engulfing, bearish kicker, evening star, or you might even see some fancy names like unique 3 river top. Then you might have 3 stars in the north. So it's kind of hard to even remember all the names right here. But what's more important right here is to remember the concept, how this is formed. And it will come back down to the baseline of the individual common candlesticks that we have learned earlier. All right, so we always focus on the ones that are marked in this video right here. So of course, technical analysis itself, it's not, it cannot be used alone by itself. But what we need to do is to combine fundamental analysis and macro factors, and also capital and risk management at the same time. But of course, we won't cover that in this chapter. And the reason why is technical events happen because of fundamental reasons. And that's why I never ignore fundamental analysis and even macro factors. So when you have all these combinations, and then you have the right strategy to go to the battlefield. So of course, technical in these candlestick combinations, it cannot be used alone, right? And even if we use it with technical analysis within a chart, we have to use it with in confluence with other technical factors. And this is where I would like to say that in the previous topics, we have covered support and resistance. And as price is revisiting the previous resistance, for instance, it will likely get rejected. So if we draw a line at the previous resistance, the high of the highest point of the previous resistance, and normally the yellow dotted line here is the alert that I have actually created in order for me to remind me, because normally I would have a watch list. Maybe I have like 50 or 60 stocks in my watch list that I would like to, I can't remember of that. But what I like to do is that I will actually set an alert. If price reaches to that level, then it sends me a notification. So in this case, if the price moves up to that level, all right, slightly higher than the previous resistance, then it triggers me, or it sends me a notification to take a look at my chart and the stock. So most of the stocks that I have actually, that I have actually qualified fundamentally are in my stock list, whether it's weak or strong. All right. Usually, if it's bullish, then I have a strong fundamental list of stocks in my chart. If it's bearish, then I look for stocks that are weak, fundamentally weak to short. But of course, going long is easier. Going short is tougher in the market, because most of the time in the market is, or more than 70% of the time, is bullish. So right here, for instance, if the price breaks above temporarily and it forms, for this instance, let's say a bearish kicker, the next candle forms below the line, and that is where I could short around which area. So let's say if I draw, so around the next day, I would place a sell limit order. All right, sell limit order around this area, right, the zone. Or you can actually execute it as market order. All right. So now that's the gist of having some other factors that you need to use in combination with the bearish candlestick combinations. So now let's look at the advanced candlestick analysis, and what if we combine some candles? So now let's look at the bearish family, and this is like the top 3 most common candles that I would regard. And of course, this is where we see shooting star, dark cloud cover, and bearish engulfing. So how does this work? Of course, the highest probability that after these candles form, then what we will see is that the price is likely to go downwards with a black arrow right here. And let's look at black cloud cover, for instance, and this is where the price would have to, this red color candle, it has to gap up, forms higher than the previous day candle, and the day after it forms, actually this is 50% of this candle's entire candle range. So it has to close below that in order for us to see the price to go down. So of course we need confirmation, and the next day if there is another red candle that closes below that, all right, so we can also short after confirmation. This is a bearish candle, for instance. All right, depends. When this is actually also, if it is in a chart area, and this is like a resistance area, if it closes below, it's also a sell signal for me. That's a confirmation. And some traders, they would like to wait for another bearish candle right here before they short the next day onwards. All right. So of course, if you wait for confirmation, maybe you have less. You are further away from the entry point, then you might not get a more favorable risk reward returns, right? So of course I won't cover that in this chapter, but many of you traders will know if I talk about RRR. Okay, so now here's the synthetic of a dark cloud cover, and if we relate that, if we combine these two candles, what do we get? So let's say if I combine these two candles, and the opening price, let's say for instance, is here, and price goes up and closes here, all right, in the first day. So the first day is a bullish session, and the second day it's a bearish session. So I'll actually shaded it pink color. So it opens at a high. So the candle, if with these two combinations, then you have a huge green candle. Then after that, it gets rejected. So closing here, and then you have actually a bearish pin bar. So now, like I said earlier, most of these combinations, they do come back to this kind of individual common candles as the main baseline. So if I show you more examples, like let's say bearish engulfing, and bearish engulfing, you need a Marubozu candle that closes entirely, gaps up and closes way far below the previous day candle or the previous candle. All right. So now this is the dynamics of it. So it gaps up, open, and closes 100% of the entire range of the previous candle, and even below that. All right. So now it opens, let's say the day that it opens for this candle, it goes up and closes there. Then the next day it gaps up, opens here, gaps up, so you have a long green candle. Then after that it closes below the previous day. So then after that it forms another bearish pin bar candle. And of course, this is another base that it comes back to. So if you look at more combinations, and you don't even have to remember all the names, all you have to remember is the concept of the dynamics or the synthetics. So let's say, for instance, Evening Star, fancy name again. The Marubozu candle has to, sorry, this one is a wrong wordings. I have to delete that. So now it has to have a regular candle to close, gap down, and close near the last 2 days previous opening. So this is a 3 candle combination. It's not just 2. So if we look at the synthetics of this, of the evening star, so on top here is actually a doji, and the color doesn't matter, right? Because there's a these are indirectional candle. Doesn't matter if it's green or red. So let's say if the price opened right here, okay, and this first candle, this first combination, and it goes up and closes here, then you have the regular green candle. Then the next day you have prices indecisive candle form, which is actually not too bullish and even not too bearish, right? So it stalls on top here, and then the next day onwards it gaps down and closes below. So as long as we see something like this forms a V shape, it forms like but this is a bearish pin bar, or some people they call it gravestone doji. So it forms anyhow. If you combine some of these candles, it forms a V shape. I mean, a opposite V shape. Then it is bearish combination. All right. So let's move on to another one. So bearish kicker. This is one of my favorite, and the criteria is that it has to. It's actually a 2 candle combination. It gaps. This is the, let's say we take this as the first day candle, first day, and this is the second day candle. We only need 2 combinations for this. Then the next day it has to form a full body bearish candle, a regular bearish body candle. All right. So the synthetics of this is, if you mix these two, what will actually happen? So again, what we can see is that the price opens here, goes up and close for the bullish session. Then the next day, the bears took it down, it gaps down and closes below. So it means the bears are in full control of this day. So right here, what you can see is that there's a bearish ice cream bar, and this is also one of the common candles that I would like to use as an individual candle. All right, so again, here is also done a few more common ones that I like, and these are also my favorites: one black crow, double marubozu, and hanging man. So until now, you get the idea. So I shouldn't draw more charts than that. And for one black crow, it's a 3 combination, and you would end up with, let's say, if you take this opening price here and the closing price right here, and if you take the high at this area, then what we could see here is that the entire 3 combinations would form a bearish pin bar. And if it's a marubozu candle, you would have opening price here, closing price here. All right, this wouldn't have a body, but you have a line here like this, and it was once on top here and it gets rejected. So you have a gravestone doji, or you can still call it a bearish pin bar without a body. So right here is also the same as this is 3 candle combination, hanging man, and it opens here, close here, and it was once here. All right, then it forms also a gravestone doji or bearish pin bar without the body. So now there you have it. So you have the combinations of these candles, and you remember the concept that that these candles, they actually whenever they form these combinations, it does come back to those baselines where you have either bearish pin bar or bearish ice cream. So with that, I'd like to thank you for your time, and happy trading and investing. Striker X here, signing off. If you like this video, please hit the subscribe and like button. And if you like to get notifications from time to time, please hit the notification button. And if you like in-depth stock analysis, you could always join our Facebook groups for more updates. So we have 2 groups right here. One is Global Financial Markets Trading and Investing. And if you like unique options trading strategies that are coming from very experienced traders, then you can join Delta Trading Group also as well. So the links are provided at the description below.